Okay, so I'm gonna start off this video and saying this is not for everyone. No, I'm serious. This is not for everyone. You really need to understand what this product is in order for you to see if you're a good candidate for it. But for those that do understand it and for those that fit into this program, this is a great mortgage or financing option to consider. So here's the thing. You were 12, 13 years old. One of your parents maybe took you to the bank to get a bank account. You open up a bank account. You were told about, a checking account and a savings account, and you were told about, finances and your finances and the basics. Fast forward, you're in university or you're in college. There's some credit card company with a little stand offering you free concert tickets or tickets to the hockey game if you sign up for a credit card. So you sign up for that credit card, you get your student visa. Now you're in this wonderful world of debt. Welcome. So you continue. You realize that, okay, maybe I should start investing. As your career progresses, you advance financially, but the fundamentals remain the same. You have your emergency fund, you have your savings fund, you have your checking fund, you have some debt, you have some loans, some lines of credit. That's the case for most of us. Now, the question I want to ask you is, if you have $50,000 in savings and $100,000 in debt, how much do you have? Do you have $50,000 in debt? Or do you have $100,000 in debt and $50,000 in savings? These are the two approaches. What this product does is it combines all of your products into one, and you have your one number, hence Manulife ONE. So now, this is how the Manulife ONE product works. So let's talk about your debt. Okay, so this is the traditional model. This is the model that you're familiar with and you're probably on right now. So you've got a mortgage, $250,000 in owing at 4%. You've got a credit card with a balance of $20,000 that you're paying 19.9%. You've got a car loan with a balance of $30,000 that you're paying almost 7% for, and you've got a line of credit at 12%, which you owe $10,000 on. So you have $310,000 of debt. Let's talk about your savings. So you've got a $5,000. So you have $5,000 in your checking account, $10,000 in an emergency fund, and $10,000 in savings. This means you've got a total of $25,000 in savings. So really what you have is $285,000 in debt. When you take your total debt and you subtract it by your total savings, you have $285,000 in debt. So let's say your home is worth $1 million. You can get a maximum of 65% loan to value. So there are other options as well, but we're going to keep it simple. This is how their core product works. So $1 million home will give you $650,000 in line of credit availability. So you'll have $650,000 available to you to spend as you please. And let's say that one is at 5.45% for the purposes of this video. Now, you're going to transfer all of that debt that you had and you're going to put it onto this Manulife ONE secured line of credit. You're also going to take all of your savings and you're also going to deposit them to this Manulife ONE account. So now you have $285,000 owing of a $650,000 available credit limit. Now you have $285,000 on your secured line of credit. So again, to get the best benefits from this product, you're taking all of your deposits. So your income, your child tax benefit, maybe you have some sort of support, Facebook Marketplace, you sell something. Any cash that you come into, you're going to deposit into this account. This is how you get the maximum benefit. Also, your bills. So everything from your utility bills, your phone bills, your property tax, whatever, any bills that you have, you're also going to have it coming out of this account. So let's get back to the balance. So now you owe $285,000, and let's say you get a check for $7,000. Now, at the end of the day, your balance is at $278,000. This is where the benefit comes in. So Manulife ONE is calculated at the end of the day. So it looks at your end of the day balance and it calculates the interest based on that. So because you now owe less at the end of the day, the interest that you're paying is less because you're paying interest on $278,000 instead of $285,000. Now you're going to get bills; those are expected, which will increase your balance. But still, you're still benefiting from it because you're not paying interest on the $285,000, you're still paying less. So maybe you accumulate $1,000 in bills, $1,000 in day-to-day expenses, bringing your end of day balance to 280,000. So yes, you're going to pay a little bit more interest than you would have at 278, but it's still lower than the 285,000 that you owe otherwise. So because the interest is calculated daily, the less money you owe at the end of the day, the less interest you will pay. So the trick is to put more in this account than you withdraw. The bigger this difference, the more you save, and the faster you pay off all of your debt. Okay, so now that we have all the figures put into the calculator, let's see the impact that it's going to make on your financial situation. Okay, so let's plug in these numbers. So the value of your home is $1 million. You currently owe $250,000, and your interest rate is 4%. So that means you're paying $1188 per month. All right, so let's talk about your financial commitments. So you've got that $20,000 credit card at 19.9%. So the minimum payment on that is going to be 3%. So of the outstanding balance. So that's $600 a month that you're paying towards that, and you're pretty much never going to be paying it off with the minimum payment. So then you've got a car loan with a balance of $30,000 at 6.99 with a monthly payment of $511. And then you have your line of credit, $10,000 balance on it at a rate of 12% with a minimum monthly payment of $100. Okay. Expenses per month. So we said, let's say $2,000 are your monthly expenses. So your groceries and utilities and just your bills. Because keep in mind, you don't have any other debt once you're going into the Manulife ONE. So earnings. So let's say you're earning $7,000 after tax per month. Maybe that's a combination of your salary plus child tax benefit, but let's just say $7,000 a month is what you get after tax every month, or deposit into your account. You've got $10,000 in your savings, you've got $5,000 in your checking, and you've got another $10,000 in, let's say, an emergency fund. Okay, so as we talked about, $285,000. So the total amount that you're borrowing from Manulife ONE and your balance is going to be $285,000 at 5.45%. So look at this, you guys. You are going to be saving with Manulife ONE $185,000 in interest. So let's scroll down here. With Manulife ONE, you're going to be paying a total of $45,000 in interest, but you're projected to be debt-free, including your mortgage, all your debts, everything, in 5 years and 7 months. On the traditional model, look at this. You are paying over $230,000 in interest, and you're still gonna have about $10,000 owing after 30 years, okay? What a difference. So let's look at the graph here. So the green is the Manulife, you can see, and this is the traditional model. So look at the difference in the savings. Because on the Manulife ONE model here, you're going to see the principal. So year one, you're paid down $45,000 in principal. Remember, you're putting $7,000 into that account, but your monthly bills are about $2,000. So everything is going towards the principal of all of your debt. And you can see at the 6-year mark, or 5 years and 7 months, you're done. Whereas under the traditional model, right, you have your balance, how much you owe, and you can see the interest, and you see that less is getting applied to the principal every single month. So this is where the difference is. And so this is the beauty of Manulife ONE. So if you are a high income earner, this could be a great way for you to pay off your mortgage much faster and save a considerable amount of money on interest. If you're a business owner, maybe you have low months where you're not earning a lot of income, well, then the monthly payment that you're obligated to pay Manulife is just the interest only portion. So it could help with your monthly cash flow. And in times when you're making a lot of money, well, you can take all that money that you've made and apply it to your Manulife ONE debt. And because you owe less at the end of the day, now you're paying less money, or less interest on that total balance. The real disadvantage of this program, to this product, is if you're somebody that's not financially disciplined, maybe you like to take more vacations than you should, maybe you like to drive a nicer car than you should, maybe you like to post on the gram and show everyone where you're eating. If you're that type of person and you're doing that with debt, this is not the product for you. And the reason I say that is because you could be in a position where you never pay off your home, simply because as you pay down your Manulife ONE balance, that balance becomes available to you. So if you put 10 grand towards the balance, you have now $10,000 to spend. So you always have access to these funds if you have an emergency or you need to make a big purchase, but you try not to, because that's really the where you're gonna see the benefits. So if you do have a major purchase coming, you go ahead and you take it from your Manulife ONE account and you make that payment through that account. So you're not gonna carry debt anywhere else other than Manulife ONE. Now, in terms of your investing, and you can still have your stocks, you can still have those from a separate account, but your day-to-day banking, your day-to-day credit, your day-to-day bills, they're all supposed to come out of this Manulife ONE account in order for you to have the most benefits out of this account. So you have to really rethink your entire life and how your finances have been, have you been dealing with your finances in order to understand how the Manulife ONE product works. But for those that do and who are strict in their and disciplined in their finances, this is a great product for you. If you have any questions about the Manulife ONE product, please let me know and I'd be happy to chat. Thank you.